Welcome to all the students in our next class of financial services. Today we'll discuss about the growth of financial services in India. The growth of financial institutions, markets and financial services we can study in 3 stages. Okay, those are your pre-independence, after independence till 1990 and after 1990s. Okay, so one by one we'll check all the stages and kindly copy these all points in your notes. Okay, because to fulfill your notes purpose only, I'm giving you it in a PowerPoint presentation. Now first we'll check pre-independence stage. Okay, some people refer it as a pre-1951 stage, both is same. Fine. I know in writing it is like pre-independence and 1951 after independence, but the material or inside story is same for both the heading. Fine. I will follow pre-independence. Now it's up to you which you are going to follow the heading. Fine. Now at this stage, the financial system was unorganized in Indian economy, and there was a very few industrial securities which were being traded in securities market. And even though they didn't had these separate issuing institutions also, fine. And you can say the participation in long-term financing was almost nil. People were not interested to go for the long-term financing. Okay, reasons: because it was unorganized and there was no separate issuing institution. When the word unorganized comes, definitely everything becomes the messy and people don't want to enter in that. Fine. So because of that, participation in long-term financing was also almost nil. And even the industries didn't had the access to the outside savings. Okay, they had the restriction. They can go only for the closed circle finance. That is just to the few peoples or few group of peoples you can contact for financing of your industries. You can't go for the outside savings. Okay, and as it was like this stage was so messy, because of that time financial system was clearly incapable of sustaining a high rate of industrial growth. Okay, because when you don't have anything properly, definitely you can't go for a high rate of growth. Okay, and specifically particularly for the growth of new and innovating enterprises. New and innovative enterprises, people were not ready to entertain because it used to involve high level of risk. Okay, and you can say it was the phase of traditional economy where you have a per capita output is low and constant. So this was a stage where the Indian economy was struggling. Fine. The next stage we have post independence till 1990s. Okay, so at this stage there was some focus. Main focus was on from private ownership to public control. Then another focus was establishment of some development, okay, banks or financial institutions for the special purpose. And even the focus was on how to strengthen our institutional structure. Okay, so public ownership of financial institution they tried at this stage. They have gone for the transfer of ownership from private to public sector, and same time they have got focused on setting up of new institutions in public sector. Okay, like nationalization of RBI in 1948. That was the beginning actually of nationalization. Okay, and in 1956 we got our State Bank of India. Okay, which also got nationalized. The older name was Imperial Bank of India. Okay, in 1956 it got nationalized and got a new identification as a State Bank of India. Okay, and in the same year, that is in the 1956 only, the 245 life insurance companies were got nationalized and merged under the one roof, and that is known as now at present as a LIC. I hope you know the full form. Okay, I don't know, you have to tell me. Now the next in the same series, okay, they were moving towards the nationalizations. In that only we can add another points also, like in 1969 14 private financial institutions also brought under the ownership of Government of India. Fine. And even if we are going to continue, then in 1980, 6 more commercial banks got nationalized. Okay, so this was the phase of your nationalization, that is converting private ownership into the public control. Fine. But same time they have focused on the establishment of new financial institutions to fulfill the new specialized requirements. Like in 1972, General Insurance Corporation got established. Fine. And there was a very important thing. In 1964, India got its first mutual trust, that was the Unit Trust of India in public sector. Okay, the Unit Trust of India in public sector. Definitely to focus towards the small savings also. Okay, and at this stage, you can say, as they were focusing on the strengthening of their institutional structure also. Fine. They were trying to provide they were trying to cover all the requirements of different areas. Okay, like we got in 1964 Industrial Development Bank of India, it got established. And then, as we know, the agriculture is the backbone of Indian economy. So in 1982 we got National Bank of Agriculture and Rural Development, that is in short we used to say it as a NABARD. Okay, so all things were like public sector and nationalization. But even though we had the one more landmark in 1955, that was establishment of Industrial Credit and Development Banking in India. The Industrial Credit and Development Banking in India, we know it as a ICICI. Okay, and it represented a landmark in diversification of development banking in India in 1955. Okay, so actually the main, or you can say the prime focus at this stage of the financial system in India was functioning as a shifting, okay, you can say not functioning, shifting the resources from the surplus to deficit sector. Fine. So in whichever sector you had the surplus, they tried through the different types of financial institutions, establishment and nationalizations, to shift those surplus towards the deficit sectors. Okay. At this stage, the role of technology was less, okay, minimum, and the quality of services was also not given adequate importance. The financial institutions were not too much worried about the quality of services. Okay, even banks also did not follow the proper risk management system. Okay, and definitely when you are not going to follow all your proper risk management system, or you're not going to give the importance to your clients or customers or quality of services, definitely it is going to result in poor asset quality and low profitability. And same thing happened at this stage also. These all problems resulted in poor asset quality and low profitability. Fine. So this was your second stage. After that, we have the next stage, that is your after 1990s. Okay. So at this stage, actually, liberalization, globalization, all were roaming in the economy. Okay, which transformed your Indian economy from closed to open economy. Okay, and to cope with these things, or to cope with these changes, the Indian economy felt the requirement of reforming the financial sector. Okay, to focus on creating efficient and stable financial institutions and markets. Okay, and as in your second stage, we focused more towards the nationalization and public sector. But at the third stage, Government of India allowed the private sectors also to enter into the financial market, okay, to be acting as a more competitive. Fine. And even they focused on the reorganization of institutional structure, and they were worried about the investors' protection also. And at the second stage, we have seen the role of the technology was very less. But at this stage, that is your third stage, they have moved towards the computerization, and they tried to go for a control mechanism also to reduce the malpractices or abuse of your funds. Okay, so at this stage, actually, to try to reform these things, okay, or try to go for the, because in creating efficient, stable financial institution, they have taken some steps like, okay, the interest rate offered on government securities, okay, were raised so that the government borrowing could be carried out at market related rates only. So government securities also started providing the better interest rate to compete in the market, okay. And even the banks simplified the structure of interest rate. Banks simplified the structure of interest rate, and they made their facility of deposit and lending rates flexible, okay. Their deposit and lending rates got flexibility, so you can attract more customers and you can collect more funds, fine. And the notable development during this phase were like privatization, okay, again coming back, privatization, then trying to reorganize the institutional structure, and main focus towards the investors protection, because without investors no financial market. I hope you know very well, fine. So this was actually the phase of where we tried to go for the growth towards the better services, providing the best quality services and providing the transparent mechanism, following the transparent mechanism towards the trading and settlement of your tradings, okay. And this was the phase where we got the hike, or you can say we got the very good growth in mutual fund industry also, okay. And for the investors protection, in SEBI got established. I hope you know the full form of SEBI, okay. Again, I am not going to tell. I'm really sorry, I don't know, so you have to tell me, okay. SEBI was established under the SEBI Act 1992 to protect the interest of investors in securities and same time to regulate the securities market, okay. And even development took place in capital market also, like establishment of your National Stock Exchange, NSE, establishment of your National Securities Depository Limited, establishment of your Central Depository Services Limited. These all came in existence to go for the protection, or to provide the protection to the investors, and to go for the more transparent trading and settlement practices, okay. And at the third stage, okay, the private sectors also allowed by the government India, they also got the permission to enter into the insurance sector and mutual fund industry sector, fine. Even the privatization of stock exchange also happened, and it was the stage where people were ready with the special type of financial support for the your new and innovating enterprise also, for which we have seen already at the first stage, that is pre-independence, very too much of problem for those people. But at your third stage, that is after 1990s, we got a very nice growth in venture capital, okay. Venture capital who are specialized or who are known for financing the new and innovative enterprises. So we got a good growth, okay. And presently in India there are around 34 national and 2 international venture capital funds which are registered under the SEBI. And as we know, nowadays it is a computerized, everything is online, okay. And they are having a more rules and regulations to control the malpractices, okay, or the abuse of your funds, or trying to provide you the more protection. You means that is your investors or the customers or the client, trying to provide them more protection so that they can have the more value for their savings, okay. And if we can say, then actually conclude, we can say that in conclusion, okay, that currently there is a lot of evolution in the Indian financial sector, as it is converting to dynamize with the emergence of primary equity market and the process of demonetization, the concept of internet banking and e-brokerage extra. We all are getting these things, okay. So if in short we have to conclude all the 3 stages, then you can go for the first point, okay. If I'll read, then also it will be irritating for you, so you can read it, no issues at all. But again, keep remember, even though at the present we have various types of financial institution, various types of financial services, or we used to say we have lots of rules and regulations present to protect our interest, but still RBI is worried about some important issues like market abuse, changing culture and shifting borders, which is a great issue. Okay, so still we can grow ahead. So this was till now about the growth of Indian financial service. Fine. So 3 stages you can divide, and you can keep remember under each and every stage some of the main point and some of the examples. Thank you. Have a nice day.